Very good morning, folks. At the outset, let me welcome each and every one of you for the fast track webinar series. This is for IBBI valuation, securities or financial asset for 2020 syllabus, and we are in day 3. And today, our topic will be on intangible assets. Must make one point very clear here, that this particular topic forms part of your serial number 8 valuation application, which carries 35 marks. And that portion alone I have given here, where questions will be minimum 6 marks to maximum 8 marks. Okay. This also includes, I must make one observation here, that in item number 5, financial reporting under Indian accounting standards, they have only included 4 standards. 36 impairment, 103 business combination, 109 is financial instrument, and 113 is fair value measurement. But in serial number 8, in valuation application, in intangible asset, indirectly one more Indian accounting standard is also included, financial reporting under Ind AS, meaning Ind AS 38, Indian accounting standard 38 for intangible asset is also forming part of your syllabus. So therefore, please don't ignore that there is only 4 standards I will prepare for exam. No, it is 5 standards. Okay. And 5 marks from the 4 standards, and there will be minimum 2 marks to 3 marks from the intangible asset standard. So maximum you can expect, minimum 6, 7 or 8 marks again from Ind AS. And I'll be doing a exclusive session on Indian accounting standard, exclusive session on case study, which I'll be announcing today in the WhatsApp group as well as in the blog. I will announce it. And those who wish to enroll for that, please do that, because there will be only very limited number of enrollment. I'll be doing it. Good. Coming to the topic, these are all pointers. Please understand that I will be referring to ICA RVBO valuation standards 302, intangible assets, IVS 210, international valuation standards 210, 210, that is also for intangible asset valuation. These two are for valuation of intangible assets. And Ind AS 38 is for identification, IMRD, identification, measurement, recognition, disclosure of intangible assets. Out of that, the measurement part, which is discussed in Ind AS 38, that will be focused for your examination. Okay, so that is why the measurement part of IA. And of course, I was surprised when some of the questions, because from the time when the 2018 was the time when the examination was introduced for valuation through the lateral entry. Now, from that time, I have been watching not only measurement, but also recognition and exchange of intangible assets. What will be the measurement or method that will be used? So that is also forming part of your syllabus. So please be careful with respect to this part. Now, I want to make one observation here, that India ranks 3rd globally in intangible assets. Now, I wish to share, India has estimated intangible assets component of 74%. And 74% of what? Total business value. Out of that, intangible asset is 3/4 for your information. And I'll just show you with one diagram. This is your liability side. This is your asset side. So if your enterprise value is 100, maybe 100 crores, equity will be 50 crores. The remaining 50 crores is your debt and the market premium. And what is this market premium? Maybe from asset side, when we analyze it, it is 1/3 is intangible asset, 1/3 is your disclosed intangible asset. So tangible asset is 1/3, intangible asset is 1/3. So roughly another 1/3 is undisclosed intangible asset, which is not there in books of accounts. So that is why the price is more than what? Maybe in your books it will be only 100 crores, but they are ready to pay 150 crores. What is the reason? Is only because of this intangible asset. And today, starting from a smallest, I will say, micro, small and medium enterprises, this concept is applicable. Maybe they don't recognize that in their books of accounts. For example, I will take a case of Tirunelveli, which is a town, which is a small city in Tamil Nadu, where Tirunelveli is famous for halwa. And that particular halwa is made by one shop, which is called Irudikada Halwa. There is no board there. But the kind of credibility that particular shop earns for ages. Today, Tirunelveli means it has a geo tag. Srivilliputtur has a geo tag for that Srivilliputtur halwa. Okay, Srivilliputtur milk halwa. Okay, Palgova, we call it as. Similarly, please go to Udupi. Udupi means Lord Krishna. And one more thing will be very famous there. After getting the darshan of Lord Krishna, people will go to Mitra Samaj, which is almost 90-year-old, which is the Udupi Hotel, where the idli and vada will be so hard and fluffy, you will actually feel divine. Okay, if at all you already got the divine blessing, through the food you will get another divine blessing. So that is Mitra Samaj for you. So all these small institutions, they have credibility, they have intangible assets with them. But unfortunately, these intangible assets are not measured, recognized, or disclosed. And some of these intangible assets, or majority of these intangible assets, cannot be separated. It is part of the business. Either you have to sell the intangible asset along with the business. That is why it is undisclosed. Okay. Now, how do we value it? Okay. Please go through all this stuff. And I want to make one more observation here, that UNESCO has identified 13 intangible cultural heritage in India. And this is the 13. Okay. Starting from Vedic chanting, Kutiyattam, Ram Leela, Yoga, Kumbh Mela, Kalbelia, folk dance and songs in Rajasthan. Everything is forming part of your ICH. It is called as intangible cultural heritage. Today, there are places where you get business because only of these kind of intangible cultural heritage. And for your information, the seven sisters in India, the seven sisters, we call it as Assam, Meghalaya, Tripura. Okay, so all the Arunachal Pradesh. These are all rich in. Actually, you be there for at least 2 days. A place like Tripura, go there. Agartala is a city there in Tripura. It will be pollution free. You will actually feel elated, and your body will actually be rejuvenated. Even you be there for 1 hour or 2 hours. That is a kind of, we live in a polluted environment. Those are all pollution free. So please understand, India has rich, not only we are rich in culture, rich in heritage, we are also rich in resources. Okay. Got. Now come to, this is your India's 38 summary, which is actually 128 paras. I will only refer those paragraphs where the measurement part is there. Okay. The first, and these are the comparison between your ICA, RVO and IVS. So in 302, intangible asset is discussed, and IVS 210, intangible asset is discussed. I will be referring both. Okay. Now, which of the following IVS deals with intangible asset? Just now we saw it is 210. Okay. Good. So it is 210. So it is B. Good. Now, this is your definition of intangible asset. In all the three, this is your Ind AS definition, para 8. This is IVS 210, para 20.1. In ICA RVO 101, para 6.19. That is your definition. Okay. There also intangible asset is defined. And in all the three places, you will have only 3 points. One is, it is intangible asset is identifiable, non-monetary, without physical substance. So non-monetary, monetary means which you can immediately convert into money form. Example, receivable, sundry debtors. Sundry debtors is a monetary asset. Non-monetary asset, all your land, building, your plant and machinery, furniture, intangible asset. So that is your non-monetary. Without physical stuff, you cannot see and touch. Okay. So identifiable means it is separable. Please understand the word identifiable. Certain intangible assets are not separable with the business. Like as I told you, in Mitra Samaj, I was having a discussion with the owner. Can you, that Mitra Samaj brand alone, is it possible? Can I use the Mitra Samaj in Chennai and can I do the business? No, it is not possible. That is inseparable. Because Mitra Samaj is entwined with all the business. So that place, culture, heritage, people, cook, process, fluffy idli. So all this, it is part of it. So sometimes your intangible asset is not separable. Then you cannot bring it in. It is not identifiable, means you cannot measure it. So that is why that part is very important. So what are intangible assets as per Ind AS 38? Identifiable. So identifiable is there. So ABCD, all the four are answer. Non-monetary correct. With the physical substance, wrong, Govinda. So A wrong. Identifiable correct. Monetary wrong, Govinda. Okay. Come to C. Identifiable, without physical substance. So C is correct. So 2C. Come to D. Identifiable, monetary, Govinda. Gone. Okay. So D is not the answer. Okay. So now you need to understand, because your syllabus deals with fundamentals of intangible assets, then classification of intangible assets, which is very important. Otherwise, categorization. Maybe if I ask you what are all the intangible assets, you may give a very big list. Please look at this. So this is your Ind AS 38. You can give examples of intangible assets. So even here they have given a very big list in para number 9. Common examples. It starts, okay, 1, 2, 3, 4, 5, 6, 7, so much, everything are intangible assets. Import quota, franchise, market share, marketing rights, customer loyalty. Okay. Now mortgage servicing rights, computer software, patent, copyright, all are intangible assets. Okay. But your Indian accounting standard, they don't classify. But your ICA RVO valuation standards and your IVS 210 intangible asset, they do the classification. Okay. And it is classified. There are many types of intangible assets, but they are often considered to fall into one or more of the following category or goodwill. Okay. Actually, this word goodwill is only a residuary term. There is a cell phone, its original cost is 40,000, but I pay 75,000. That 35,000 is actually goodwill. Business worth is only 6 crores, but I pay 7.5 crores. So 1.5 is actually goodwill. Goodwill is not defined anywhere for your information. It is neither defined in your ICA RVO valuation standards nor in international valuation standards. The only definition is goodwill is a residual value. Okay, please be very clear about it. And here they will fall in one or more of the following category. Now, why the word one or more? Okay, and I will give examples at that time. You will appreciate. So there are 5 categories, and these are the 5 categories. Even your ICA RVO valuation standards also mention. What is that? Customer based, marketing based, contract based, technology based, artistic based. Now I will come to each one of that. The only difference between IVS and ICA RVO valuation standard is the word will be related. Here in IVS they use a word called marketing related. In ICA RVO valuation standard they will use a word called marketing based. That's the only difference. Now, what is marketing based? Please understand that to evolve your business, that means to grow your business. Okay, for further growth and evolvement of your business. Okay, for the next stage, you need all this. Trademark, brand, trade name, internet domain name, okay, .com, okay, .org, trade design. These are all marketing based intangible assets. Now, please answer this question. Okay, which type of intangible assets are created with an entity establishing relationship with its customers in the due course of business? That is called customer based intangible assets. Now, what is customer based intangible assets? Entity establishing relationship with its customers. For your information, today we have a customer list. That is very important. What do you call it as intangible asset? Customer list is an intangible asset. And I'll give you some more examples. What do you call it as order backlog? Okay, order backlog is a customer related or customer based intangible asset. You go to Salman Khan. Salman Khan is booked. We are now in 2022. He is booked till 2025. Okay. And Talabadi Vijay. Talabadi Vijay, one of the highest paid actor. Similarly, Mahesh Babu of Andhra Pradesh, both, they are booked till 2026. So that means for another 4 years, you may not get their call sheet. So only you will get their call sheet in 2027. Okay, for your information. Both are very parallelly, their their call sheet is booked. So order backlog. In India, there is one company which is actually disclosing we have so much of order backlogs, and that company is Larsen and Toubro. Larsen and Toubro, in their annual report, they give the order backlogs. So that means their hands are full. Okay, so that is your entity establishing relationship with its customers. So same work will be done by L&T, same work will be done by another engineering company also. But here the bidding will be greater because of their order backlog. That is their intangible asset. Customer list, customer relationships. See, today customer relationship that is actually intangible. You cannot see that. People don't want to change their doctor, change their lawyer, change their auditor, okay, change their valuer, and this customer. Similarly, some product. Say, I am very comfortable with a toothpaste called Colgate. So maybe if you give me another better toothpaste with the price less and with more very nice flavor and all, I will not have that, because Tamil Nadu people are like that. Tamil Nadu people, if they are once they are attached to one party, one product, and maybe one spouse, it is very difficult for them to change. Okay, so that is called customer relationships, which is an intangible asset, for your information. Okay, so now come to this question. Which type of intangible asset are created with an entity establishing relationship with its customers in the due course of its business? Okay, it is customer based. Okay, so 3B. Similarly, what are customer based intangible assets? Maybe. Now I want to bring to your kind attention that examples. Please come to this. Customer based intangible assets can be contractual or non-contractual. Now, why the word contractual or non-contractual is coming? Say, your order backlog, you can enter into an agreement. Say, I am already booked, I will complete this particular work and then I will start your work. Same is the case with your call sheet of Talabadi Vijay, Salman Khan, okay, Amir Khan, or Shah Rukh Khan. So you can sign an agreement with them, but you will not start the film production today. Okay, you will only start the film production 2 years later, but agreement is done. So that is why it is called contractual. Sometimes it can be even non-contractual also. So your customer relationships, is it contractual? Do you ever, sometimes you don't, do you force your customer, no, you should only buy the product from me. So that kind of, so that is why customer-based intangible asset, a customer-related intangible asset can be either contractual or non-contractual. Okay, so now answer this question. So contractual, non-contractual, either ARB. So it is C. Either ARB. Now, which type of intangible asset include customer list, backlog, contracts, or customer based? Okay, so it is 5B. Now I'll go to the other one, which is not a customer based. Backlog is a customer based. Customer relationship is customer based. Customer contract is customer based. Okay, because you enter into a customer contract that you should only buy the product with me. Trademark is actually marketing based. So D is your wrong answer, which is your right answer. Now, evolvement of business, which type of intangible asset or evolvement of business or further growth? So it is not customer or artistic, or it is marketing based. 7A. Now, I'll take you to the other one. Now, let me take you to which type of intangible assets are arising from right to benefit. Please watch this word, right to benefit. Now, artistic based intangible asset create from benefit arising from artistic work. So, art based, what is it? You write a book, you write a play, okay, so you create a music, you create a film. So right to benefits, okay, so these are all artistic based. So 10C. I'll now take you to another this. Which of the following is not an example of marketing based? See, trademark is marketing based, brand is marketing based, internet domain name is marketing based, but lease agreements are all, they are contract based. So you have contract based, what do you call it as intangible asset? Agreement. So easements, the right to actually access a particular place. So these are all rights. So agreements. So there can be many types of agreements. Let me give you some examples. Look at this. Lease agreement, license agreement, employment contract. These are all contract based. And non-competing agreement. an agreement to just keep quiet. You should not compete. That is also an intent. That agreement. I'll say see, especially it will happen with, and I am a director or a producer. I am very sure that that particular film will be a hit. I am introducing a new heroine, and the new heroine, she is going to be a super hit, and she will be the top actress. So what I do for the next 3 years, I'll enter into an agreement with her that you should not agree to work in any other film unless and otherwise I allow you to actually work. So that means her call sheet is booked for 3 years or 5 years. Even though my film will be only for 6 months, but I'll book her call sheet for 5 years. So 4.5 years, her call sheet, I have to say yes. So somebody will come and offer her to do work in a film. She'll say, I have already committed. So please go and get no objections from so-and-so director or the producer. So I'll give her no objection. Okay, you can now work for this particular film, but there will be a consideration. So there will be a consideration. Please understand. So that is, so non-competing is actually an intangible asset. You can make money in it. Just keeping quiet. Okay. So that is your the what do you call it as the contract based lease agreements or contract based. So 9D. Now I want to take you to one very interesting part. Okay, this is in valuation. You have 2 types, especially in market based. Yesterday we did that market approach. In market approach, there is a question: which of the following method under market approach would you consider appropriate while valuing intangible asset? Okay. Now appropriate. In market approach, which is appropriate? See, when you go to the market, I want to value a particular machinery, okay, which is already 3-year-old. Now, how will you do it? You go to the market, you find the identical or similar, and get that value, and then compare. So that is, what do you call this? Is it called multiple? Is it called relative? Is it called consistent? It is called exclusive. Exclusive means the same thing you are actually quoting it and people bid for it. That is called exclusive. Okay, you know the exact value for it because people come and so you have to spend more time, effort, money, etc. to actually get that valuation. Relative valuation means a similar identical asset, time, maybe that particular asset which has been dealt with recently, maybe 2 or 3 months, okay, or 2 weeks before. So that is called relative valuation. What is relative valuation? Estimate of an asset relative to that another asset. What do you mean by relative? Relative can be in terms of identical. Now, how do you relate it? By various methods. Okay. For example, by size wise, it will not be same. It will be different size. Then you have to calibrate it. You have to adjust it. Okay. So there you will use multiple. So the method, which are the following method is called relative method. Multiple is not a method. Multiple is an arithmetic. Please understand the difference between these two. Actually, under relative only you will use a multiple, but multiple is the arithmetic. It is not a method. So under relative method, you follow certain multiples. Enterprise value to EBITDA, enterprise value to EBIT, enterprise value to NOPAT, like that. Okay. So something you will use, or you will use that value to the horsepower. If the horsepower increases, the value will increase. Horsepower decreases, value will decrease. So that is where the multiple will come. Okay, please understand the fundamental difference. So 8B. Good. Now come to next one. Okay. Very interesting. Let me take you to this is the most important part. This is I will call this as a popular question. Highly popular question. 18th question. Okay. India is 38. Internally generated goodwill. Now, I will now take you, this is your Indian accounting standard, internally generated goodwill. So now there are internally generated intangible asset, internally generated goodwill. Both are not same for your information. So that is why I am bringing your kind attention to both. So please pay your kind attention here. So point number 1. Okay, so this is your internally generated goodwill, para 48. Now, internally generated intangible asset. Both are not same. First clarity. What is an internal generated intangible asset? These are all by research and development. You you design a product, you design a process. Okay, maybe that will have a life of 5 years or 10 years. Sometimes maybe you are unsuccessful. Then you have to charge off to P&L. Development means there is 6 conditions you have to satisfy. Then only you can recognize that as an asset. Okay, so the development phase they have given 6 conditions: A, B, C, D, E, F. Okay, I will call this as Aru Padai condition. This Aru Padai condition, Aru Padai means Lord Muruga. Okay, so if you have to bring an R&D into books of accounts as an intangible asset, Aru Padai, you have to get the blessings of Lord Muruga. Then the 6 condition, when you satisfy, you can actually recognize. So come to this question. Now, internally generated goodwill, you can never recognize. People will say, I have a very good name in the market. People come to relish this dosa only because, see, especially go to Mumbai, the street foods are very popular. Mumbai means street foods are very popular. Calcutta, you go to, street foods are very popular. Even for that matter, in Chennai also. Okay. So Delhi also, street foods are very popular. And every guy will actually will have a customer base of 500, 1,000, 2,000 customer base. Can you say, no, I have internal generated goodwill. So these are all my customers. Okay. Can you recognize that as an asset? No. Shall not be recognized. So please understand. Shall be recognized as asset? No. Shall not be recognized as asset? Yes. So 18B. Shall be recognized as non-current asset? It will not come in the books. But how will then you will see the money of internal generated? Only by selling the business. Sell the business, people are ready to buy. Why? You have a 2,000 customer base. People pay for that. That is why I gave in the beginning. I gave in the beginning that you have the what is called as intangible asset, which is disclosed, which is not disclosed. Why Zomato valuation is very high? People say, that is the internally generated. They have customer base, so he paid more. Okay. Whether the valuation is high or more depends upon your business only. Okay. Because from 2,000 you should get business. So you should not have a rosy picture. So please understand that particular part. So 18. Now come to 19. In India is 38. The residual value of an intangible asset with a finite useful life shall be assumed to be. Now, in India is 16. It is property, plant and equipment. How will you depreciate an asset? Cost minus residual value, and you depreciate over the useful life. Now here in intangible asset, cost you will know. Okay. Now what is the residual value? Is residual value value in use? Is it carrying cost? Is it cost to disposal? What is it? Now you will be surprised. I want to take you to one particular paragraph. That para is called 100. So please go to para number 100. You will be totally surprised. The residual value of an intangible asset with a finite useful life. What is called finite? You are able to say only 7 years, only 8 years. Is always assumed to be 0. Assume to be 0, please. Assume to be 0. Why? 19B. Now, what if there is a value? Well, if it is a value means that you should have a document. You should have a concrete agreement with the buyer who agrees. Yes, at the end of 3rd year, at the end of 5th year, I will pay this consideration and take this intangible. Intangible, you cannot see, you cannot touch. So therefore, once you have put a cost, you have to amortize over its useful life. Now, useful life, again, you have to actually review every year. Okay. And maybe at the beginning, useful life is 7 years. Okay. Maybe 2 years later, useful life is not, remaining useful life is not 5. It is only 1. Because other competitor product is coming. That's all Govinda. So that is why intangible asset, you should always have more, you should have more information than tangible. Tangible, you can go touch, feel it. You can make it run. Now you can see what the production is. But intangible asset, no. Okay. So that is why it is 19B. Now come to another question. Very, very interesting question. Okay. So this particular part, I want to take you to the very what I will do, I'll take you to a very important paragraph 22. Okay. To understand question number 21, I'll take you to question number 20. So 20 and 21, okay, are very important questions. Okay. Now, When an intangible asset shall be recognized. So I'll take you to para 21. These are all in bold color. They have given two conditions. Okay. So there should be future economic benefit. February, it is called FEV. So there should be a return. That intangible asset, you can use it, you can earn some income. That is why it is called probable that there will be future economic benefit from that. Say there is a design. Using the design, you can make a production. Okay. And then you can make revenue out of it. So therefore, it has a future economic benefits. And cost can be measured reliably. So the design, maybe if it is an internally generated intangible asset, you will have a cost. People, process, time, effort, energy. Okay. So the development cost and all, you can measure it cost. Or maybe you would have bought that from somebody. So then cost is what the money you have paid. Okay. Otherwise, it is called as a transaction price. So these are the two conditions. Now answer this question. So an intangible asset will be recognized if as an expenditure is incurred. No. Cost is uncertain, wrong. Okay. It is probable you have a future economic benefit. February, FEB, and cost can be measured. So C is your answer. Where it is given, para number 21. So para number 21, question number 20. Now come to 21. This is para number 22. Now, I want to put one interesting question. Cost can be measured. Actually, this question says, cost can be measured reliably. Okay. So who will measure the cost? That is a question. Now, please come to this question. Who will measure the cost? Is it the auditor will estimate, or you will go to the market and you will find the estimate, or the registered valuer will estimate, or the management will estimate? This is why para number 22, I want to bring your kind attention. An entity shall assess the future economic benefits that represents management's best estimate. So it is only management is ultimately responsible for that because they only do business. Sometimes management can even take the help of an expert, a specialist, and take the report from the specialist also. But it is a management. So that is why whenever auditor wants to do the audit of useful life is always management's best estimate. So the listed company audit reports, if you look at it, there will be a paragraph which is called as key audit matters. Auditor will say, see, if useful life we are unable to audit. Why? Useful life, how can you audit it? Because it is only an estimate. So wherever estimates are there, you cannot do audit. You can only give a key audit matter because subject to that, it is true and fair. Okay. So it is not qualification for your information. So it is called management's best estimate. So 21C. Okay. But now I will take you to the next interesting part. Now, I was referring to, this is your para number 104. Okay. Come to 104. Now, amortization period, that is called your useful life. Your useful life, you have to amortize. Now, once you have fixed a useful life, is it permanent? Or should you have to review the remaining useful life quite now and then? That is called amortization period, you have to review now and then. So, the para 104 says amortization period and amortization method, okay, shall be reviewed every year. Okay, every year. So look at this. How often should the useful life should be reviewed? This is also an estimate. So is it once in 3 years, once in 5 years, 10 years? Wrong. It is every year. So 22A, para 104. Okay. Now, this is a very, very important paragraph. I'll take you to para number 45. Okay. Look at para. This is your para 45. Exchange of assets. See, for an intangible asset, you get an intangible asset and you give shares. We'll presume like that. Okay. So what comes in intangible asset? What goes out as shares? Equity. Now, at what is the, how many shares you will give? So both are, one is a non-monetary asset. Okay. Now for your information, I want to make this point very clear that this question you have to go, then I will come to this because question number 35 I will take. Look at 35. An intangible asset shall be measured initially because this entire standard, they have only used cost and fair value. They have not used market value or going concern value. And I want to bring to your kind attention para number 24. This is the smallest para. This is the smallest. Look at this. It will start and it will end. Intangible assets are measured initially at cost. But there are exceptional circumstances where intangible assets shall be measured at fair value. And that is 45. One or more intangible asset may be acquired in exchange for a non-monetary asset. So then the cost of such asset shall be measured at fair value. Unless and otherwise fair value you are not able to measure from the market, then you will go by the asset that has been given up. What is given up? Equity shares. Then measure equity share. Okay, fair value. That will be the fair value of. So it is like anda say chicken aya, chicken say anda aya. Hen or egg, which is first? Okay. So standard says you measure the fair value of the intangible asset. Okay. Maybe if you are not able to measure that because that particular intangible asset market pay nahi hai, it is new, then how will you get it? So then go by the fair value of the asset that is given up, or even that is not possible, go by the cost. Okay. So very interesting. An intangible asset shall be measured initially at cost. 35D. Okay. But this is initial measurement. Now when you exchange it, so for exchange, I'll take you to para number 23. Question number 24. No, 20. If an intangible asset is exchanged for another, cost of the intangible asset is measured at cost? No, it is measured at fair value. So 23A. Okay. Please understand the difference. Initial measurement always at cost, but exchange means at that time it is fair value. Okay. So there is one more exceptional cases where fair value also will be there. So two exceptional circumstances where fair value will be measured. All other cases it is only cost. Okay. Good. So now let me take you to the income methods. Now, how will you measure the intangible asset? 5 methods. Okay. Under income approach. See, one is excess earning method. It's called mean multi-period excess earning method. Relief from royalty method. Another is called premium profit method. Another is called Greenfield method, distributed. All these I am going to discuss. Okay. And remember, these are exam questions. You cannot miss this. You cannot miss this. Okay. Good. Now, what is this? What is? Generally, I used to do a session on intangible asset. I am actually doing a session coming Saturday morning, 8:30 to 9:30. We'll have a session on basis of value. On that particular standard alone, I'll be doing a 1 hour session only on basis. Okay, coming, and I've also invited City Union Bank General Manager. He will give a pep talk for just 5 minutes, the importance of valuation, and then I will deliver a lecture for 1 hour on only basis of value. Okay, what are the various bases are there? How important it is. Okay. And 1 more week later, I'll be doing 2 or 3 weeks later, I'll be doing only on intangible asset, the standard 210, entire 210 I'll be discussing. Okay. But now, how many methods are there? 5 methods. Now, which method you will use for which type of intangible asset? Okay. If it is a customer-based intangible asset, contract-based intangible asset, a market-based intangible asset, artistic-based intangible asset. Okay. So, for that type, you have to use that method. Okay. So please wait, let me explain. So I have given an example. This is a very important slide. A very important slide, because sometimes based on this, you may get a question. Okay. So let me give a mean means multi-period excess earning method, distributor method. This multi-period and distributor method both are connected. First and the fifth. Multi-period starts with the word M. Distributor starts with the word D. In a family, also you will have mother-in-law, daughter-in-law. Mother-in-law starts with the M, daughter-in-law starts with the D. Now, who will have the chabi key? Chabi will be only with mother-in-law. Okay. So, when in your balance sheet, you have 2 intangible assets. Okay. That is called, one is a technology, another is a customer relationship or customer list. 2 intangible assets are there. Both you want to do the valuation. Now, how will you do valuation? So, when you have multiple, okay, more than one intangible asset, the primary intangible asset you have to go by the mother-in-law method. That is called the multi-period excess earning method. Now, the secondary intangible asset will be the daughter-in-law method. That is called distributor method. Okay. So That is why M and D. Now, how M and D will be done? I'll explain. And remember, guys, all the income approach, if I give the calculation, on top of it, I'll remove all those heading. Only calculation alone I will give. You will be surprised. All the 5 methods will look alike. Because what is the income approach? Future economic benefit, future cash flow. Okay, all the future values. First year, second year, third year, fourth year, fifth year. Then your terminal value. Then apply the discount rate. Find the present value. That's all. This is your income approach. But there is a slight variation. That slight variation is what you need to capture. Based on the type of intangible asset, you will go for the method. So now let me take one by one. Okay, now I'll take you to the which of the following. Now methods alone there is a question. Okay, then I'll go inside the method. Which of the following are income approach methods? Oh, excess earning, or relief from royalty, or premium profit. All 3. Okay, all of the above. So 24D. Okay, good. Now come to this paragraph. This is International Valuation Standard 210 para 60.25 and ICA RVO 302 para 68 and 69. Very important. Now I'm going to discuss about a method called with and without method. Okay, with and without method is frequently used. And remember, guys, this with and without method is otherwise called as premium profit method. With and without method. Okay. So let us understand this with and without method. Okay. Now, the with and without method is frequently used in the valuation of non-competing agreements. Okay. With and without a scenario. Maybe I'll give a simple example. Okay. Now there are 2 contractors who bid for a work. L1 is to A. L2 is for B. Now L2 is requesting L1. Okay, A. B is asking L1. L2 is asking, you please withdraw. Now don't compete so that I will get the contract. Okay. Now this guy, if he wants to withdraw, he wants some payment. Now he is approaching you. Sir, I want to sign the non-competing agreement. You tell me how much I have to ask for. How much I have to ask for. So how do you do this valuation? First point number 1. This particular L1 contractor is already having 6 contracts in his hands. This is your 7th contract. Now, with the 7th contract, what will be his cash flows? Discounted, find the present value. Without that 7th contract, only 6 contract, what will be his future cash flows? Discounted, and then find the present value. Naturally, 7 contract present value will be greater than 6 contract present value. So the difference is the incremental present value which he will earn. Okay, because of this particular contract. Now he has a number. See, I am going to earn 40 lakhs because of this contract. Now you tell me, if I have to withdraw, how much you will pay? This is where the what do you call the discussion will start, or things will start. So please understand. So you need to appreciate. So what is this? This is an income approach method. Okay, simple. So now answer this question. The with and without agree method is frequently used in which valuation? Technology? No. Customer relationship? Customer relationship, you will go to daughter-in-law. Okay. Trade name, that is marketing. Technology. Non-competing agreement. So 25A. Okay. Now come to a distributor method. Now to understand distributor method, I'll go to the meme method. So let me finish meme, Greenfield, all those I will come. So first I will finish Greenfield. Now what is Greenfield? Remember, there is a difference between Greenfield and Brownfield. Brownfield means an existing entity, running entity, going concern entity, you go and buy. That is called Brownfield. Now what is the Greenfield? You want to establish everything from the beginning. Now I go to this Mitra Samaj. So this is your Mitra Samaj, guys. This photograph. This is your Mitra Samaj. This is your Udupi Hotel, Mitra Samaj. This is the fluffy idli, the tasty sambar, okay, and chutney. Now it is almost 9:15. I am sure all of you will be hungry. Don't be hungry, okay? So I'll tell you. And this is your wheat halwa. And in Tirunelveli, this is your Irrittakada. Is there any board? Is there no board? Okay, good. Now come to this question. So what is a Greenfield? Now in Greenfield, the interesting part is the intangible asset what you are going to value is the only intangible asset. This is the first point. Okay, that means you don't have multiple intangible assets. Now, example, I'll give you an example. Say, the example is the franchisee agreement. Broadband spectrum, 5G, 4G, and all. Now, why this is very important? Because the entire business is built on that. Aircell, they got the spectrum license for 20 years or 30 years. They got the spectrum license. Now they have paid some 150 crores, 200 crores. They have paid. So that is a broadband. Now, only after getting that only you can start business, because formation of company, people, recruitment, having all nothing. One minus this, there is no business. That is what is called the only asset based on which the business rests. Okay. So now how will you do this valuation? So valuation is very simple. Again, income approach. In case I got the license, in case I got the franchisee of the Mitra Samaj, okay, then how many years you will give franchisee? 5 years. So 5 years, what will be my business? My sales, my expenses, my interest, everything I'll subtract. Find my profit after tax, add depreciation, find free cash flow, okay, of equity, and then I'll discount it with your KE. I'll find the present value. Wow. So by giving this franchisee, I will get this much. Revenue minus expenditure. This is your surplus which you will get because of the franchisee. Now, 50, 50, 40, 30, 30, 80, 25, 75. You agree for it or you negotiate some price. No, sir, I will only earn 1 crore. You take 10 lakhs, sir, because that he is only giving a franchise. That is only called as he is a shadow partner. He is only a passive partner. But active you only do. So for activity, you have to get more share. For passive, less. So something you bring a model. Once you know the value, you go for a model. Okay, so that is very important. Now answer this question. The Greenfield is often used. The often used to estimate the value enabling intangible assets such as franchisee. Now look at this. The Greenfield method is often used for enabling intangible assets such as franchisee and broadband spectrum. So both A and B. For A and B, both you will use. So 27C. Okay. Now I want to bring to your kind attention. This is actually para 60.30 of IBS. Now this is para 50.6 is 201. Okay. So 201 is your business valuation. Okay. Now examples of intangible assets for which market approach is sometimes used. Please look at this. So broadband spectrum market approach you will use. Internet domain name, taxi medallion, route permit. This is actually a UK terminology. Taxi medallion is a UK terminology. International Valuation Standards, that the International Valuation Standards Council or International Valuation Standards Committee is established in US, but they have their headquarters in UK, London, for your information. That is why these terminologies will be in British English. Okay. So since it is in British English, Indians will understand much better because we understand British English rather than US English. So taxi medallion is actually called route permit. Internet domain name. Broadband spectrum. Why broadband spectrum? Just now we saw this broadband spectrum comes under Greenfield method, and Greenfield method will come under income approach. But here they say broadband spectrum, intangible assets sometimes used. Okay. Why? For example, there is a Maharashtra 5G license is given, and we are given Madhya Pradesh 5G license is given. Done. So valuation is done, license is given. Now next to Madhya Pradesh you have Chhattisgarh. Now Chhattisgarh you want to give a license. Should you do valuation once again, because already you have done and market rate is known to you, do some calibration. Maybe the area for which you are giving here, the area, how many people, users, that this load to connection. Go by some calibration and reduce it or increase it. So you need not again do the same valuation exercise again because you have already the market value. So that is the reason. Similarly, internet domain name. So now answer this question. Which of the following are example intangible assets for which the market approach is sometimes used? Okay. Broadband, internet, all of the above. So 28D. Please understand the difference. Okay. So here it is market approach. Here it is Greenfield method is income approach. Under income approach, also it will come. Okay. So very, very thin difference. Now, let me take you to the next part. Look at multi-period excess earning method and distributor method. Very important. Now, what is the multi-period excess earning method? See, you have a primary intangible asset. Okay. So the primary intangible asset is your technology. And the secondary intangible asset is, say, your customer relationships or customer list. Okay. Now, both you want to measure what is the value. So now what you will do, how will you actually do the valuation under multi-period excess earnings? Okay. These steps are very, very important. Multi-period excess earning usually follows the following steps. Okay. Now, in this, you need to understand something very, very important term called contributory asset charge. Let me answer this question. Now, in excess earning method, what you will do is, you will actually calculate the revenue minus expenditures. You will get the net income. Now, when you get the net income, I am going to show you one dabba. Look at this dabba. Revenue, cost of goods sold operation, tamal, EBIT. You got it? Super. Less. From here, this is your cash flow. You are going to subtract the various other assets that has contributed to this business. Like, for example, these are all the various other here: brand, content, license, workforce, property, plant and equipment, working capital have contributed to your business. So you have to find how much they have contributed to the bottom line. Okay, you need to do an arithmetic by working based on your past data, and you have to arrive at this percentage. This percentage is called cost, the contributory asset charge. What is contributory assets? Contributory assets are assets that are used in conjunction with the subject intangible asset. So, what is subject intangible asset you want to value? You want to value in technology. Along with the technology, I put people, I put what do you call this, brand, I put the working capital. All these are also contributing. They are all contributing to the revenue. So, find out that percentage and knock off. So, this 47, maybe this is 47 crores. Out of this 47 crores, who and all contribute what? Brand contributes 2 crores. License contributes 1 crore. Content contributes 19 crore. You have to calculate that, and that is based on your past experience. And once you knock off from this, the remaining 8 crores is who contributes? Primary intangible asset. Primary. This is called multi-period excess earning. What is called? Multi-period is a variation discount. So it is discount cash flow only. So you have more than one intangible asset, maybe 2, 3, 4, 5 intangible assets. So knock off all those things. So if you will have remaining, that remaining is the value of that, the particular intangible asset. Now you take you discount it and arrive at the present value total. Now in this total, you will also you will have to add that tax amortization benefit. This tax amortization benefit will be a examination question, guys. Now, what is tax amortization benefit? I'll take you to the international valuation standards, the last paragraph. Okay, this is your last paragraph where the tax amortization benefits are discussed. So now come to this 210. This is your 200. So where is this? 200. Tax amortization benefit 110, para 110. Please look at this. This is a very, very important question. Okay. Now 110. Look at this. Tax amortization. Now I want to make one observation here that you already got the present value 123. So that is 123 crores is the value of your intangible asset, which is your your technology. Your technology value is 123 crore. Now you have done this using income approach. This is not done through cost approach or through market approach. Now, if this is the value, on this you are eligible for amortization, that is depreciation. If the depreciation you would have you included in this? No, you are not included. So you want to value one intangible asset, but this depreciation is not included, or amortization is not included, and that amortization has a tax benefit, and that tax benefit is a plus to you, is a cash flow. So that depreciation alone, amortization alone, you will calculate. What is the tax on that? That you have to find the present value. That will be 18 crores. This 18 is actually separately calculated. That sheet I have not given. So that is called tax amortization benefit, and that is applicable only for income approach. Please understand. This paragraph is very, very interesting. Please understand this paragraph, guys. Okay. So this, please look at this. Such as financial reporting, hypothetical sale, and the tab should be included when the income approach is used. You will not use this approach for a market approach or a cost approach. Only for income approach only, this tax amortization benefit will come. Okay. Now answer this question. So which method estimates the value of an intangible asset as the present value of the cash flow attributable to the subject intangible asset after excluding the proportion of the cash flow that are attributable to other assets, excess earning methods, not relief from royalty or greenfield or with or without, 31A. Okay. Very, very important. You need to understand this, then things are easy. Now, I'll take you to bottom-up beta. This is a very, very important question, guys. Now, what is called bottom-up beta is, what is beta? Especially in CAPM calculation. Okay, so this is your, I'll take you to a CAPM formula. What is the CAPM formula? Okay, your risk-free rate plus your beta into market rate minus risk-free rate. This is a formula for your cost of equity. And remember, guys, this formula is not taken from clouds. This has a derivation. Okay. And I am basically a mathematics student, so therefore I actually venture into this derivation and do all those mathematical stuff, understand why that formula has come. So it is not formula given in study material. You have to take that study formula and then use it. This formula has a derivation. Somebody has a hypothesis, assumptions. Based on that, they have formed an equation and then they have arrived at a solution. And that, please try to appreciate it. Maybe this derivation alone will take 1 hour for me to explain and understand. That is worth to doing it because this is the celebrated model. The CAPM has got the Nobel Prize winning in before 1980. Okay, for your information. Now, what is bottom-up beta? Now, what is this beta? Beta is actually regression coefficient. Okay, this is a regression coefficient. Okay, hope you understand what regression coefficient is. And why this regression coefficient means the relationship between your asset, what you're going to value, and the market. Market goes up, asset value goes up. Market comes down, asset value comes down. Then your beta will be 1. Okay. When beta will be 0, whatever happens to market, nothing will happen to your asset. In Tamil, we will say, that means the rain will fall on the buffalo. Nothing will happen. That is called beta 0. Okay. So then, how will you calculate this beta? Especially, what is called this bottom-up beta? You want to find the beta of one particular company. You want to do the valuation of a company, but you don't know the beta. So what you will do? You will take the beta of a comparable company. You will take a beta of a comparable company. But that comparable company beta and your company and you take the same beta. No, you cannot take. So what you have to do? Because why you cannot take? The comparable company's beta will have a different capital structure. You will have a different capital structure. So that beta you have to unlever. You have to bring down. So that is why delever it and then relever it. Delever and relever. So then only the relevered beta is called your asset beta. So the formula what you have to use is this. I'll be doing this particular calculation in my case studies, but simple one question I will do here. Please look at this. Company X is a non-listed private limited company. Here are some details. Okay. And a comparable company is company A. Okay. So company X you have to do. So this is your company X. Okay. So I'll delete this. This is your company X. Debt is 20. Equity is 40. So debt equity ratio is 40%. How do you got 20 divided by 50? So 40%. Tax rate is 30%. Okay. Now, what is your unlevered? Now, what is your comparable company? The comparable company is X. Company A is operating the same industry. So therefore, you will take the company A's beta. What is company A's beta? 1.2. 1.2 is your company A's beta. This is company A. Now from company A, you have to come to subject company. So what you will do, you will unlever it. So how will you unlever it? The formula is this. This is your unlevered formula. So unlevered formula is levered beta divided by 1 plus 1 minus tax rate into debt equity ratio. So levered beta, what is levered beta? 1.2 divided by, okay, 1 plus 1 minus tax rate is 35% into your debt equity ratio. Debt equity ratio is 40 by 80, so 50%. Okay, very important, guys. So you have to be very careful. So 1 minus tax rate into this. So this is your unlevered beta. So now, how will you get the levered beta? So from your comparable company, levered beta, you have got unlevered. So that is 0.9095. You take that. This is unlevered beta of your subject company. Now your company's capital structure, you lever it and bring the beta to the required beta. So how do you take the required beta? The required beta is unlevered beta into your company's debt equity ratio. So therefore, unlevered beta into 1 plus 1 minus tax rate of subject company is 30% into debt equity ratio. So fine. So 1.1592. So that is your what is your unlevered beta? Unlevered beta is 0.9057. That is B. So 33B is B. And what is your levered beta of company X? We got it as 1.1592. So 1.159 or 1.16. So D. So 33C is D. Okay, and what is the formula for unlevered beta? Unlevering means you have to divide, not multiply. Leverage means you have to multiply. So what is the basic stuff? Comparable companies beta you take, unlever it, so divide, then relever it, so you multiply. So that is called your bottom up beta. So bottom and up beta. Okay, good. So guys, I must appreciate each and every one of you. Now before I'll only take 5 more minutes. So I will request all of you to be online. Okay, for the next 5 minutes. I'll just request few of you to kindly share your thoughts. Huh? Maybe shall I request Sri Hari Sadhu? Sri Hari Sadhu, I've just unmuted. Please unmute yourself. And anybody else who wish to share, can I request Anju Ajmera? Anju Ajmera, I've just unmuted. Let us hear from you. We'll also hear from Sudhir Mandava. Sudhir Mandava, I've unmuted. Let us hear from you. And let me also unmute E. Ganesan. E. Ganesan, I've unmuted. Don't connect any external devices. You can't see me. Let me also find from Mr. M.S. Subramaniam. Yesterday we couldn't hear Subramaniam. We'll hear from Mr. Subramaniam today. We'll also hear from Lakshman and Bharati. Okay. So good morning, Lakshman and Bharati. Please unmute yourself. Let us hear from you. And we'll also hear from Jacob Matthew Mavelil. Jacob Matthew Mavelil, we'll hear from you today. Okay. So guys, please unmute and wish to hear your feedback. Okay. Please be there for 5 minutes. So I will also hear from Dibakar Datta. Dibakar Datta, I have unmuted you. So wish to hear from you, Dibakar Datta. And GS Murthy also I have unmuted. And Siva Prasad also I unmuted. Okay. Then there is another guy called AN. AN I have unmuted. You have to say what is your full name. Anil Saldanha. I have unmuted Anil also. Yes, please go ahead, Siva Prasad. Good morning.
Good morning, Raj Garu and fellow participants. I'm Shiv Prasad from Bangalore. I'm a CMA and ex-banker. I attended your classes earlier also, and because of your great learning, teaching, I could pass my insolvency examination. Likewise, I want to take your guidance and great in teaching and want to clear this examination also. The way you teach is very, very scientific, and you stress important points which are not covered in some other classes, etc.
So we'll come back to you. Let us hear from Dibakar Datta. Good morning.
Yeah, good morning, sir.
Yes.
I am Dibakar. I'm from Delhi. I'm working with a business advisory firm. And fortunately, now I'm pursuing this course. And
Can you give
yeah,
me a brief background? What is your academic? What do you do?
I'm MBA. I'm MBA Finance. I'm not CA. I'm not CMA. I'm not CS. Yeah.
What do you
So
do?
I basically work on transactions,
Okay.
merger acquisitions, and private equity investments. So basically facilitate funding to the corporate houses.
Very good. So your feedback about the sessions?
Yeah, sir. For this, I would say like I have attended your class thrice earlier also. When I have not joined for this course, even that time I have attended your class, and I'm really pleased. And it's really honor to listen you. It's sort of knowledge and the level of knowledge that you have and the passion that you have to impart those knowledges. It's
Thank
really incredible.
Thank you, Datta. Thank
God
you.
bless you.
Yeah. We'll hear from you. We'll hear from you later. Let us hear from AN. Yes, Mr. AN, please introduce yourself, your full name, your location, your academic background. What are you, please, and share your.
Can you hear me, sir?
Absolutely clear and loud.
Good morning, sir. My name is Anil Nair, and I'm from Kochi. I had attended your course. I'm a chartered accountant in practice. I had attended your course earlier, but then I had not finished the 50-hour mandatory training session, which is now completed. So I just want to have one more look at your material, and it's extremely useful and very, very focused. It's really going to be useful for the exam. Thank you.
Thank you, Mr. Anil Nair. Our best wishes. Let us now hear from one more participant, Mr. P. Ganesan. Can we hear from you, Mr. Ganesan? Mr. P. Ganesan, can you unmute yourself? Wish to hear from you. Okay, let us now hear from Mr. Sampath Kumarji. Good morning.
Good morning, Dr. Raju and my dear participants. Raju has highlighted about the importance of intangible assets, which is 74%, and one third has not been evaluated or measured at all. The importance of IMRD, identification, measurement, recognition, and disclosure, and as well about the categories of various intangible assets. The distinction between intangible asset, initially it has to be recognized as a goodwill. There is no cost at all. And likewise, every minute aspect correlating between ICARV valuation standards and toggling between this IBS and 210 and 302 very nicely in a very passionate. Thanks, Dr. Raju and your entire team. Raju is repeatedly highlighting about one important thing about the time, energy, and resources spent. Daily, I am seeing the blog box. Only a few of them are responding. Just a word. It will not take 10 seconds for you. I request each one of you to add your reflections and put your suggestion, your experiences, what you undergone. That will go a long way and motivate the team and Dr. Raju to contribute more for the welfare of our brothers and sisters. Thank you very much. Thank you, Dr. Raju. Thank you, my dear friends.
Thank you, friends. We'll see you tomorrow morning, same time, 8:30 a.m.